What I find most fascinating is the actual owner. He was a dog handler, a furniture mover, and the one that tickled me the most, he was a grave digger. He won't even claim expenses for travel because he was so much in favour of shareholders.
The business is recession-proof. If you have invested 10,000 in 18 years ago, you will have 1.25 million today.
What I like about it is the decentralization approach. Not only does it acquire businesses,
Encourage employees to be a shareholder. That's significant skin in the game.
This may help you make a decision. Welcome to the latest episode of the Intelligent Wealth Podcast. As usual, I'd like to introduce our eminent team. First of all, Awet, who is the head of research for Minerva Money Management, little plug for our company, and Carl, who's a fellow director of the company. We're all shareholders. I'm the majority shareholder, Tony Byrne. I'm the managing director. So this week, we're going to discussing one of our shareholdings, which we think is a fantastic company called Constellation Software. Mm-hmm. So to make a start, who'd like to open up about Constellation Software? Awet.
Yeah, it's one of the greatest companies in history. I mean, if you have invested 10,000 in Constellation Software in 18 years ago, you will have 125x today since IPO. That's 34% compounded annual growth rate over the 18 years. So the 10K would be 1.25 million today. So that's an extraordinary story of growth and compounding over time.
I bet you wished you'd invested in it when you were still at school, Awet. You'd be a rich man now.
Yeah. When I read Chris Mayer book, 100 Bagger, it's pretty much the story resonate Constellation Software. This sort of companies that you look for to invest. And you just invest, sit down and do nothing pretty much and let the money compound it over time.
Okay. Carl, so what do you think of Constellation Software?
It's a really interesting company, Constellation Software, because it's essentially a fund, isn't it, nowadays? Because what it does is it buys software companies in very kind of niche markets, and it's looking to buy companies that operate critical software. So it's software that is critical to another business, which means that it's quite sticky business because they're not likely to change critical software that much. They have to use that software. So they're obviously going to pay decent money for that software if it's critical to their business. And it operates in quite a few markets, public sector, education, healthcare. So these are all like critical industries that should be around for the long term. But yeah, essentially, it's just an acquirer of businesses. But what I like about it is the decentralization approach. So not only does it acquire businesses, it doesn't kind of force them into, a Constellation Software kind of theme or culture or branding. It leaves them all as their own separate brands, running their own, quality businesses, and allows them to then acquire other businesses as well. So it kind of feeds itself over time, which I think is really interesting.
Yeah, I mean, what I find most fascinating is the actual owner, because when Awet explained the company to me and the owner a few years ago, I've never heard of him. Mark Leonard, who's he? He's not exactly well known, not like Jensen Huang of NVIDIA, for example, or Warren Buffett of Berkshire Hathaway. So he showed me a photograph and I nearly fell on the floor laughing because Mark Leonard, he's probably in his 70s now. He's got very, very long hair and he looks like what I call a hippie. I mean, he just doesn't look like a business owner. And he's so unknown. He never grants interviews. And I quite like that because it means he's quite modest. He doesn't want to brag about what he can or can't do. And I looked at his history, what jobs he'd had before he started the company. And they're very varied, very interesting manual jobs mostly. He was a dog handler. He was a furniture mover. And the one that tickled me the most, he was a grave digger at one stage. I think these were probably all part-time jobs before he really got going. He got qualified at a not very well-known university, so unwell known I can't remember it. He then spent 11 years in the venture capital industry, which is completely different to this, which is all about short-term gains, short-termism, whereas maybe that shaped him because he then wanted to be investing in a business which was more long-term, and Constellation Software is the complete opposite. But what's fascinating is that he does have a parallel experience with one of the greatest investors in the world and business owners, Jeff Bezos, because he, of course, worked in the venture capital industry as well. And the other thing he's got in common is with these other great business owners like Warren Buffett is that he's just very modest. And I find it incredible that he's given up a salary. He could be earning millions of dollars a year. He doesn't take a salary at this stage of his life because he's worked really hard building the company up over the last 20 to 30 years.
Mm-hmm.
He won't even claim expenses for travel because what he used to do, he was so much in favor of shareholders, not diminishing the value of their shares, that he wouldn't go first class on a business trip for the company. He would always go second class, and he decided that he wanted to go first class. He wanted some comfort because he'd worked himself really hard for many years. And so instead of charging the company for first class travel for business, he now pays for his first class business trips himself and takes a zero salary. I mean, what a great example. I always feel that these kind of business owners who either take very modest remuneration or zero says a lot about them. And also the fact that they're modest. We want companies where the founder owners or the owners, the management team are modest and they're very conscious of costs. They keep their costs down. I think that's a really good attribute. And so that's arguably what you'd call one of the qualitative factors. I think investing is quantitative where you got the numbers and qualitative where you're looking at the more non-numeric features, more like the culture of the company, etc. And I think he's certainly embedded that with a great example. So back to you, Alway. As our head of research, what do you make of all the numbers? I'm sure you studied that a lot before this podcast. What do you make of it all?
I mean, the numbers, I always look at them. Yeah, and I think you made a great point, Tony, saying as a leader, you have to lead by great example. I think Mark Leonard is an example. He's a leader, and he pretty much preach and he does what he says he will do. And he encouraged employees to be a shareholder because, as we said, it's all about incentive. When you change the incentive, people, the way they think is different. They think like a business owner. When they think like a business owner, it's not a job anymore. It's just they have the motivation to make it right.
Yeah.
So when we look at the number, he personally own around 1.9% of the company, which is worth around 1.8 billion. And in total, management have around 7% of the company, which is valued around 6.5 billion. That's significant skin in the game. I think is one of the main things that we look for. As we always say, if management don't have significant skin in the game, I mean, the risk is pretty much not much. If all they have to do is forecast and, based on compensation and the share price going to rise and so on. But this is pretty much, they are incentivized to make sure, based on the return on capital. If they just allocate capital properly, that's how they incentivize. So that makes employees think like owners. So when we look at the growth, Constellation has been growing by 19% since 2016. That's compounded annual growth, and free cash flow by 21%. So it's been very profitable and it's still growing when we look at these metrics. And when you look at the free cash flow margin as well, 21.4%, and they pretty much convert all of their earning into free cash flow, which shows that that's a good quality of earning. And still, when we look at their debt, they still have, when you look at the interest coverage ratio, they still 6 times. So that's quite safe in our book. You look at the revenue breakdown, mostly is software, and the 74 to 75% is software. And the 20% is professional service like integration and training and so on. So, and they have a small percentage of hardware. So the company is known for capital allocation. When we look at historically, they allocate capital properly. When we look at return on capital employed, it's 29% in the last 5 years. And you look at the return on equity, 36.64%. So they have been allocating capital properly, as Charlie Munger said before. Capital allocation is a key determination for companies' growth over time. And it worked, and it stood test of time. If companies can generate capital properly over time, as Buffett said, it would become a compounding machine. I think Constellation Software is a testament of that. And historically, I mean, they have been acquiring companies. So far, they have around 700.
Yeah.
They stopped disclosing how many companies they own a few years ago, but in the assumption they would be around 700 plus companies, and they are taking the free cash flow and reinvesting in the business, and they're growing it. I think their target rate is around 20% IRR. So they targeting businesses that they can generate 20%, and they can continue to do that over time.
Yeah.
You have a company where they are disciplined in terms of allocating capital. When we look at the valuation of Constellation Software, I mean, the current PE ratio is 92 times, which is a lot. But the accurate way to value Constellation Software would be using a price to free cash flow, because that's the focus. The company is focused on free cash flow, which is, I personally think, is the best way to measure a company, one of the best ways. So
Yeah.
when you look at the price to free cash flow is 32 times. It's not too expensive. And when you imply the discounted cash flow, the stock price is still trade at premium in terms of historical perspective. But as we always say, for a quality company, you have to pay a premium.
Yes. So how about yourself, Carl? Any more comments on?
Yeah, I think that's always one of the risks, isn't it, with a great company like Constellation Software, is that you do pay a premium for it. So you're relying on that company to continue its performance over the long term, and its past numbers have been impressive. There's no denying that. I think even just if you take the last 5 years alone, I think it's up over 400%, the share price, up until the recent market wobble that we've had. But like I always say, it's not so much what's happened previously, it's what's going to happen next.
Yes.
That's important, especially if you're going to invest now into Constellation Software. Obviously, there are risks, because as it gets bigger and bigger, it's going to become harder for that company to find other companies to acquire that are going to make a meaningful difference to its sort of growth over the long term. It's a classic case of Buffett's problem, isn't it? He's Berkshire Hathaway is now so big that he basically just sits on a huge pile of cash, and finds it very difficult to deploy that cash to acquire new businesses. But I don't think Constellation Software are there yet. They've got room to continue, but they will come up against that problem in the long run, because they don't focus on massive businesses currently. They've always focused on very small niche software businesses, which is good, because if any of those businesses don't work out, it doesn't really impact the company as a whole, because they're small proportions of their overall portfolio. But as they get bigger, they're going to have to look into the market and start to acquire bigger businesses, which then will add risk to the portfolio, because these bigger businesses, if they don't work out, will cause distress on the rest of the portfolio. So yeah, it's interesting moving forward. I think there's still a lot more room to go in their model that they've got currently, but at some point they will get find it difficult.
What I find quite interesting about Constellation Software is that their business is what I would describe as a boring business in a boring industry. But do you know what? The returns aren't boring at all. The returns are fascinating, very interesting. So I'm increasingly having the philosophy that it's better to invest in boring businesses, in boring industries that are dominant, where they're not going to be subject as much to the hype surrounding AI, for example. But they're still in a big growth industry. It's still IT, it's still mostly software, but it's not going to be as overvalued as AI arguably is, that causes a bit of a boom. And then as soon as you get shocks in the market, it's affected more heavily. Like, for example, the recent Trump tariffs. So I quite like that. And what's interesting about the business is that normally when public companies take over other companies, it normally doesn't work. It might, for a short term, look like it's working if you look at the profits, but that's an accounting adjustment, because the profits always rise on the takeover. But the truth is, most takeovers don't really work. They just don't work at all, not very well. But they've made this is the exception that proves the rule, of course, because this is where it does work. But I think it's like Carl was saying earlier, the type of business, because they own lots of small businesses and they incentivize the owners and don't interfere too much. They let them carry on as if they're still owners of the business, but they pay them very highly. Many of these business owners still earn $1 million a year, so they're very motivated because they're not controlled. They're left to get on with it themselves. And that's another parallel with Mark and Leonard and Warren Buffett. Warren Buffett acquires businesses, lets them run themselves. He doesn't get involved in the day-to-day. And I quite like that, because the problem with big businesses, as we all know, big businesses, big government, they're all the same. They all become too bureaucratic. It takes too long to make decisions. They're poorly managed. And the greatest business owners, I believe, like to have small business units, because you get less of this bureaucracy, and empower people to make decisions, to just get things done. So it means it's a smoother, better run business. And I quite like that. The typical cost of the service from vertical management software is 1% of the total revenue of the company. And because it's sticky software that's essential to run the business, boring procedures, but you have to have the software. People aren't inclined to go elsewhere. Why would you bother changing everything and uprooting everything for 1% of your turnover? It's not worth it. This is critical software. So no big business can compete with them, really, because no one else has that kind of model. So I do think it's interesting that it's so different, the model. So clever what Mark Leonard has done. Any thoughts, guys?
Yeah, I mean, the good point you made, Tony, is about like recession. I mean, the business is recession proof because, as you said, it's not a software anyone can deploy. It's a vertical software, which is a bespoke software. It's
Yes.
difficult, even if you want to cancel it, it's difficult to find a different provider. So it's a sticky revenue. So the revenue continue will grow. The key point is, as Carl made earlier on, Constellation Software is a 95 billion in Canadian dollar market cap company. So it's difficult now. If you buy the average company they buy is 3 to 5 million, which is very small. So it becomes difficult to buy small companies and continue to make meaningful impact on the company, revenue and profit. So they have to go up find a bigger company, which is with bigger company there's a bigger competition. I think that's where they're finding it quite challenging now. When you have to buy a big business, you have to pay a little bit more. And there's a lot of competitors now. They're emerging into the vertical software market. So that's the challenge Constellation Software is facing currently.
Carl, can I ask you, the big objection you get from investors with this type of business, where it's been run for many years by a visionary founder owner, is what's going to happen once he's not on the scene anymore? How could they continue with this success? Have they got plans in place, do you think? What do you think?
Well, I think, yeah, that is always a challenge. And one day, potentially soon, we're going to see that with Buffett and Berkshire Hathaway, aren't we? Just how much do the shareholders rely on Buffett as opposed to the rest of the management team? And the same thing, is going to happen to Constellation Software again. Where I think they're slightly different, though, is again, going back to this decentralization model. Mark Leonard does not run all these companies and interfere into all these companies.
Yeah.
He acquires the company because it's already running with its own management team and its quality. It's got a lot of recurring revenue. So really his focus is on the sort of the acquiring stage rather than running all these businesses. So if you take him out of the equation, there should not really be any impact on the portfolio itself. The challenge will be for the new people is determine which businesses to acquire going forward. That's the challenge. But I think in terms of the core business model, that should be relatively safe because, like I say, because of that decentralization approach, which is really interesting. Not trying to force all these smaller companies into their way of thinking. Leaving them to run their already kind of quality business. So I think there is a bit of sort of safety in that.
Warren Buffett, of course, famously once said, you want to have a business that can run itself, even if an idiot was in charge, because one day there will be an idiot in charge.
Yeah.
So maybe this is one of those companies.
I think even like when you think about Apple in the last few years, there's no much innovation is happening, but I think the company has done really well. The share price has done really well. It's like just an example. When you look at the moat, when you look at the company, it can just run, anyone can run it. It can still do well. I think Apple is a great example.
But I think Tim Cook is not an idiot. He is really good at managing a business, but he just doesn't have the innovation skills that Steve Jobs had, obviously. What do you think, Carl?
Yeah, I think the one we can't underestimate for Constellation Software to achieve these levels of growth rates that they're currently doing going forward is that they have to still acquire more and more businesses because the businesses they currently have, although it's a very solid recurring model, it doesn't that recurring income they get doesn't grow that much itself because they're low cost critical systems. So there's not a lot of competition for them. But then that means that they don't kind of tend to grow kind of the revenue that much from the existing business. So yeah, you're relying on Constellation Software to keep going out there, identifying new businesses and to acquire them. So that's kind of the key thing going forward. But even if you take that away, they'll still be a very solid, well-run company because they've got loads of recurring revenue.
Yeah.
But it's whether they can achieve the same growth rates going forward.
Apparently there are unlimited numbers of these businesses in the United States that do have this vertical management software. There's many you can acquire, even though they're small. I actually think what they've created here is effectively, in all but name, a franchise. It's like a franchise, or what you'd describe as a turnkey system, which was in the E-Myth book. They talk about a turnkey system. It's not officially a franchise, but it's just where it's so systematized, so well organized and well run. You got that great scalability with that type of business. That's what I think it's become. Personally, I think it will continue to succeed because there are many of these companies, but also because if you look at the board of directors of Constellation Software, all the board members, and there's about 5 of them, they've all got typically 20 to 25 years experience of working and managing Constellation Software. And I'm sure they do virtually all the work. That's not to demean or lower the ability of Mark Leonard. He's still this great visionary founder owner, but I think you'll find they're not that reliant on him now. So that gives me a lot of confidence in their future, for the foreseeable future, at least. And when you think about with AI, although I talk about a bubble, you think about it, AI would be a great benefit to this business. It's going to make them all more profitable.
Yeah, I think the great thing about AI as well, like Google, we see what Google is doing, deploying it. Once you have it, you can deploy along, for example, so Constellation Software, they have around 700 businesses. If you can deploy around all of them, suddenly you can increase your productivity and you can become more efficient and you can reduce the cost and become very profitable. There's a way AI can increase the productivity and make them even more profitable.
I'm sure.
But the question I am asking is, based on my calculation, Constellation Software, the market is implying 21% growth. Historically, Constellation Software revenue has grown by 21% in the last 5 years, let's say. And in the last 5 years, again, the free cash flow has grown by 21%. So the market is right in that term so far. But when we invest, we always invest in the future. Can Constellation Software repeat 21% based on the growth? I mean, based on the size they are now. And I think the question is, it's going to be challenging moving forward to achieve that much growth. But as we said, because they rely on acquiring businesses, maybe if they can deploy AI, they can be more productive and they can become more profitable. That way, maybe they can achieve it, but it's going to be challenging.
I think what you can see in the last 5 years, particularly, is that compounding effect. They're a great business for that kind of compounding model, aren't they? Because the line, it starts off very slow. It's almost flatlined if you look kind of back, say, 20 years. But then all of a sudden, the last few years, the line's just gone, shot up in terms of share price. And I think it's that compounding effect, isn't it? Whereas where they've got tons of cash flow coming in, buy another business, add more cash flow, buy another business, add more cash flow. So I think there's definitely room to run on just purely based on that compounding, whilst they're acquiring more businesses.
It's such all this capital allocation, because for the listeners who aren't 100% sure what we mean by that, it's just how you spend the surplus cash that the business generates each year. And that's what makes all the difference. You can have 2 businesses that generate the same amount of cash each year, but one just spends it all indiscriminately. The other one invests it. And this is only one method of investing it, is to acquire other businesses. I mean, you could just simply buy back your own shares, for example, or invest in systems and hardware and software alone. There's lots of different ways of deploying capital. They could just give it all away as dividends, which I never think is a good decision personally, although some might disagree with me. I actually quite like it being reinvested in the business if the business can keep generating very high returns.
Yeah, I mean, when we look at 2024, Constellation Software has generated around 2.1 billion in free cash flow. And if you can think about it, the target goal is to invest it at 20%. if they can compound that over time. I mean, they can still, I mean, in terms of cash flow, they are rich in cash flow. And if they can continue to deploy that to acquire more businesses, I mean, there's a chance that they can generate the 21% the market is implying on the company.
Yeah, can I just jump? I just want to jump on a point I made earlier about free cash flow, just for any listeners who aren't 100% certain what we mean by that. What we mean is the cash from operations minus the capital expenditure, things like plant and machinery, that kind of
Mhm.
thing. So what cash is left? We're not talking about the profits or what's called earnings from the accounts, because unfortunately accounts can be manipulated quite a lot, and they usually are in public companies. Whereas the thing with free cash flow is that you can't lie about the amount of money that's going into the bank and coming out of the bank and that's being spent and earned. Although some wags, they do say to me, what about so-and-so company? You do get the odd, like, very fraudulent company that even get around that. But that's
Mhm.
fraud. I mean, that's
Yeah.
outright fraud where the company just goes bust. That's very, very, very rare, that kind of manipulation of accounts. So we're very skeptical about accounts because, unfortunately, too many of the measures in accounting can be manipulated, shall we say. I'm not saying that these accountants are fraudulent, but it's back to Charlie Munger saying, you show me the incentive, I show you the outcome. Well, accountants, no matter how much the accounting standards tell you that they've got to be independent, at the end of the day, they're paid by that company. So there's going to be a bias. So it might be an unconscious bias to give them credit, but they're going to produce probably higher profits on average than they would if it was a private company, because private companies are incentivized to keep their tax bill down. They don't care about so much about the level of profits. The owners want to pay lower tax, so they tend to show lower profits, whereas a public company wants to keep showing higher profits. And some of these great accounting scandals in the last 20 years, like Enron, for example, it's just a complete disaster because of that incentive. So you've got to trust. That's why it's so important. That one of the big qualitative facts, which I like about Constellation Software, is that the owner is so honest. And when you've got skin in the game, that changes your incentives, because with skin in the game, in other words, a shareholding, you're not going to screw the shareholders because you're one of them. So
Yeah.
inevitably, this is a great way of working out whose side the business owners are on. If you just get appointed as a CEO of a big business and they're paying you tens of millions of dollars a year, and then there's examples where people have been paid $100 million plus a year, and they don't even own any shares in the business. I mean, I just think that is a recipe for disaster. It's the wrong incentive, isn't it?
Mhm.
Whereas if it's your baby, you formed the company 20, 30 years ago, you're still working in it, you're giving up your salary or having a very low salary, you're very incentivized to do the right thing by shareholders. So the honesty is so, so important. I think it's the number one in my book.
Yeah,
Right.
I think that's
Yeah.
why if you look at the shareholding based on Constellation Software is a loyal shareholding. Like they are fan of the company and
Yeah.
they admire the company with integrity and trustworthiness, towards shareholders, because what they believe is they clearly say that we are actually the way you measure us is based on cash flow. And that's why when you look at the free cash flow conversion, which is a measure of quality to of a business, is percent, which is pretty much they convert all of their profit into free cash flow
Yeah. Which is then reinvested 100% into
for
buying new
business.
businesses. So back to this capital allocation decision, to give you a simple analogy, it's a bit like your personal life. I've come
Mhm,
across individuals
mhm,
who make terrible capital allocation decisions. In other words, they earn their money and they just spend it plus a bit more. So they spend more than they earn.
mhm,
That's poor. That's poor capital allocation. In other words, whereas
mhm.
I've come across people on very modest salaries who end up becoming millionaires, sometimes multimillionaires. You told me the story once, a low salary man who made millions of dollars.
It was Ronald Reed. I
Yeah,
think he was a cleaner. He works in the petrol station. And I think he was very good in allocating, like investing in the right thing. I think by the time he retired, or he was at the age of 80 or 93, he had 8 million and he gave it to the
dollars.
school. Yeah,
Yeah, yeah.
so $8 million. So It's not how much you make. The key thing you learn from is how much you keep and invest.
So this is why we're mentioning it, not
Mhm.
because we particularly need to mention an individual, just so the listeners
Mhm.
can understand what we're getting at with capital allocation. What's brilliant about the Constellation Software, they're great capital allocators. That's the key. Don't you think, Carl?
I think also having a founder
Mhm.
that's a bit of a character is an asset to the business. If you look at the
Yeah.
Magnificent Seven or the big companies in the world, they've all
Mhm.
got a character, haven't they, as their sort of leader, and that's something people can kind of get behind. Now, you may not like Jeff Bezos, Elon Musk, those types of people, but there are a lot of people that are, and they create this kind of big fandom, don't they, following behind them. And I think although Mark Leonard's more recluse compared to the others, he is still a character that I bet within the business there's
Mhm.
quite a following behind him, and I think that just can be a real asset for a business going forward.
Yeah.
Yeah. I think he's one of those outsider CEO. Those are Warren Buffett's favorite book, The Outsider. He analyzed about 8 CEO. Their background is different completely. They became one of the most successful CEO in the world, like Jeff Bezos. Like they found businesses and so on, but they did something that most CEO wouldn't do, something extraordinary and contrarian to the main view. And I think it's quite admirable when you see CEOs do something that just not follow the crowd, but they do their own and they reinvent their own playbook, like Constellation Software they've done with software.
Yeah, I think it's a background of having real jobs and having a sort of a tough life thing, because you learn more about the economy by having lots of kind of different
Mhm.
jobs at different levels of management and things, don't you? Rather than going to university, getting your business degree, and then jumping straight in as a high level manager at a company. You don't understand the true economy at that
Mhm.
point. You've got to kind of live a slightly
Yeah.
tougher life to
Yeah.
understand how
Well,
it
that's
all
why I
works.
mentioned Mark Leonard's background. I thought it was key and relevant. Even Warren Buffett, I think he was 14. He didn't just have one paper round. He had multiple paper rounds, but do you know what? He wasn't running around delivering all the newspapers. He was employing other boys to do it for him. So he already had the idea. Yeah, I think the other thing to bear in mind, we talk about the
Mhm.
future of Constellation Software. Of course, the future's not certain for any company. Every company will eventually fail. Even Jeff Bezos says that Amazon one day will fail. It doesn't mean they necessarily will, but I just think it's a healthy attitude to think you're going to fail one day.
Yeah.
Keeps you on your toes.
I think when you think you will fail, you tend to stress test your thinking and try to see different things from different angle. And most companies, the problem you have is because it's a CEO, no one will say or criticize them.
Yeah.
And I think they wouldn't know what's going on. I was reading something on LinkedIn, and then a guy, he sold his company for 200 million, but he worked as a delivery driver to just see the pain point of clients, of customers when he delivered goods. I think most management wouldn't understand. They just get a report, right? And they just look at the report, but they don't really feel the pain of the consumers. And that's why I think most business fail. You don't really experience it. There's a difference.
I couldn't agree more. Yeah.
Mhm.
Yeah, I think there's I heard something interesting the other day. I might get these stats wrong, but out of the S&P 500,
Yeah,
there's around 100 companies on there that are classed as zombie companies. That's
right.
100 out of the S500,
Yeah.
and what they mean by that is that they might still be slightly profitable. They've got a ton of cash, but they're just not growing anymore because they've kind of just reached the peak of the sort of their market. There's no one to buy. They can't innovate any further. So they're just kind of trundling along, but they've got all this cash. So some of them could even be kind of losing money slightly every year, but they've got so much cash still in the company that actually they could last another sort of 20, 30 years. And there's around 100 companies doing this. It's one of the reasons why MicroStrategy went into buying Bitcoins, because they had a ton of, I think this might have been 600 million or 6 billion of cash or something. And they didn't know what to do with it. Is do they just wind a company up? Do they return it to shareholders? But they just looked at something that's going to kind of inflation proof them, and they went for Bitcoin. But the point is that, yeah, you've got to kind of keep growing,
Mhm.
and keep deploying that capital and growing your business to kind of continue to get returns. Otherwise, you're just going to end up with one of these sort of
Yeah.
zombie companies.
Well, anyway, I think we've reached a
Mhm.
natural conclusion here. It's been a really interesting, lively debate mostly about Constellation Software. So just to remind the listeners that you can find more material in the show notes down below, including this one-page company snapshot on Constellation Software. Just to remind you, it's not advice, it's just our opinion. You've got to do your own research always. I would encourage listeners to go onto Spotify and give us a review. That would be very welcome. And we're going to continue in this format going forward, just researching and discussing companies that typically are in our own fund. And we look forward to future episodes. So thanks very much for your time today, gentlemen. It's been a fantastic debate, very interesting.
Thank you.
Bye for now to our listeners.
Thank you for joining us today. Please help us spread the word by sharing this podcast with your family and friends. And don't forget to subscribe.